Hello, I'm Ed Sylvan, the CEO of Sycamore Entertainment, symbol SEGI on the OTC markets. And today I want to talk about a concept in the OTC markets that might be a little foreign and, as I said in my last video, a little unorthodox. And that's the concept of being organized as a group of traders. In this market, there is so many pitfalls and so many ways that traders lose money. And I think a lot of that stems from the fact that everybody's operating, every person for themselves, in a market where it's just filled with different organized groups which have the odds stacked against you. I think that if OTC market traders just sort of took the time to realize the market that they're in and the game that they're actually playing and organize as such, the levels of success will be so much higher and the success rate will be so much higher and the proceeds will be that much greater that I think more people will find success in this market. What do I mean by that? I mean that each trader in the OTC markets is out there on his own or her own trying to find pockets in the market where they can pick off some trades, make some cash here and there, but they don't really have the information that's needed in order to make the decision to even get into that stock, stay in that stock, support that company, and even how to support that company. Whereas all the professionals in that market, be it the market makers, the brokerage firms, the lenders, which are the people and companies that lend to OTC market companies, these are even the bashers, even the haters are organized in this place. So the odds are stacked against you. And I think that it's time that OTC market traders come together. And when I say come together, I don't mean sharing information back and forth in a chat group on Discord or StockTwits or iHub. I mean actually speaking to each other and offline and finding ways to support the company in order to help the company grow. Because as the CEO of Sycamore Entertainment, I'll be the first to say that so often, so many great opportunities have slipped through our fingers because we didn't have the funding we needed in order to execute the transaction. I can name off countless times where we had best-in-class partners, best-in-class opportunities that are sitting in our hands that we failed to fund. In fact, more often than not, a couple of times I've been sued. Sycamore has been sued as in the result of not being able to fulfill an obligation. And all of it's there, documented online. You can go and check. They've just been tremendous opportunities, and that's always led me to think. There's a saying, your best customers are your current customers. And I think if people believe in public companies that they're invested in, they've taken their hard-earned money, why don't they support these companies? And in turn, they'll get the support of the CEOs and the managers of whatever company you're in, including Sycamore Entertainment. And I think that the lack of organization, and it's through no fault of your own. I don't want to sound like, us against them or you and us. And I just want to say that through no fault of the traders, they're just not organized. But every other group that they're trading against is. And I think that traders also need to start thinking more like venture capitalists. The venture capitalists that exist in Silicon Valley that support these tech startups where they take huge amounts of risk, put money into the companies long term, support the companies, bring management, bring people who can support, join the board of directors or become employees on the technical side, the sales side, anything that is the company needs in order to get to the next level. Because at the end of the day, everyone, the goal of OTC market CEOs and the goal of OTC market traders is to have that company uplist to a senior exchange. Because when that happens, it's the same as a venture capitalist taking one of their companies to IPO. The multiples and the returns are anywhere from 10x and higher. And those gains are hard to find trading on your own in the OTC markets. And that's the reason why I think that there's ways that the lines of communication between traders and CEOs of these OTC market companies can start to communicate with each other, understand the business plan, chart a course, and together we can all get there. Because at the end of the day, the real payoff is on the uplist or the refinancing on the IPO. A lot of times, us CEOs are forced reluctantly to have to go to OTC market lenders, and these types of organizations in order to get the capital that we need in order to keep the company going. And what does that spell for the traders and the investors? It spells dilution. And that dilution is financial suicide to investors. And that's where a lot of the distrust comes from. It's where a lot of the anger comes from. And it's where a lot of the losses come from. So I think that if there's a way that OTC market traders and OTC market CEOs can chart a path to communication, and we can educate you folks on how to think like and act like VCs more than traders, to take companies from where we are now to uplist and to take advantage of the many opportunities that we have sitting in front of us that we just sometimes are undercapitalized to take full advantage of to take us to that next level. I think traders on the market will see significant improvements in their performance in OTC market stocks. And another thing that will happen as a result of this relationship is expectations will be reset on both sides. I think that that's a key component that's missing between CEOs and the traders that trade their stocks. It's just the expectations aren't there. In this market, as I mentioned just earlier, the OTC markets is more like the VC market as opposed to a day trader market, which I sort of more gear towards Nasdaq stocks. Stocks trading between $1 and $1.50 on Nasdaq are more akin to day trading because they have what's needed to really move stocks, and that's institutional sponsorship. Those stocks are getting financial coverage by the brokerage firms that took them public. And then they have media coverage from mass media, major market outlets. These CEOs get to go on CNBC and CNN and Bloomberg and the Financial Times and tell their stories to a broader audience, where OTC market stocks don't have that advantage. So I think a lot of the times we lack the capital that should be coming from the shareholders, but it's not. It's coming from these OTC market lenders, and these are literally vulture lenders. A lot of these firms, they drive hard bargains, they charge astronomical interest rates for the capital, and they get these shares at deep discounts to the market, which all that does is go on to hurt the investors that bought in through the public markets and are holding shares, not having access to the same opportunities that these venture or vulture investors on the OTC markets get. So if there was a way that we can pass those opportunities to the shareholders that believe in us and give you those opportunities, it helps together to move this opportunities forward so that we all can benefit. And that's one of the things that I really think is lacking in this marketplace. It's just a readjustment of thinking of what market we're playing in right now, the timelines that are needed to succeed, what success actually looks like, and how we can work together, communicate together, all working towards a common goal, which is the uplist. Because let's face it, everybody, the true liquidity is on the major markets, where you have institutional coverage, as I just said. You have the funds. A lot of these funds that trade on Nasdaq and a lot of these brokerage firms, mutual funds, they're not even allowed to buy OTC market stocks based on their mandates. So what's driving the market in the OTC? It's just basically individual investors, a lot of hype, a lot of news, a lot of hearsay, a lot of rumor. And the people there's professionals that play in that market, they know that. And their goal is to keep OTC traders unorganized, confused, and in the dark, because you folks, unfortunately, represent the liquidity event that they need in order to liquidate their shares that they get from the CEOs, because we have no other place to get that money. We can't get it from the funds that trade on Nasdaq because they're not allowed to give us that money. We would much rather be working with the shareholders who invested in our companies in the first place, give you folks the first opportunity to be able to do that, and then you should reap the benefits going forward. That way you get to hear the story, you get to share in the business plan, you get to share in the goals, and more importantly, you get to share in that liquidity event if, as and when the company goes up listing. And that's where the real fun and the joy starts in this marketplace. There's nothing wrong with trying to trade OTC market stocks, but I think that there should be a two-pronged approach. In one section, you should be having a long-term portfolio where you know it's a 3 to 5 year hold, and then have a few free trading shares in your account that you can dabble in here and there, and have some fun with it if that's what you want to do, knowing that you're here to support whatever company you're invested in for the long term, with the goal to uplist to a senior exchange where you'll realize your absolute liquidity event. And why is that? When OTC markets uplist to a senior exchange, what happens is there's growth happening, and this growth is identified by these funds, these exchange funds, these microcap funds, these mutual funds. There's all kinds of funds that are allowed to buy your stock once you're trading on Nasdaq. And then there's other opportunities on the major markets, such as getting, Nasdaq companies can eventually get included into one of these indexes, such as the Russell 3000 index. And if that happens, all the major index funds are obligated to buy your shares as a company. And if you're holding shares as from when you were in the OTC markets, guess who gets to sell it to the funds? You do. And it's at significant multiples of where you might have obtained them when they were in the OTC markets. So I think that these are all the opportunities that are missed, and there's a handful and tens of great companies on OTC markets that would love nothing more to grow their businesses, including Sycamore Entertainment. We have great opportunities to grow in a business which is streaming. We've had great opportunities in our hands. We've missed a lot of opportunities because we just didn't have the funding in order to be able to take advantage of those opportunities. We've missed a lot, but opportunities keep coming to us. And I and many other CEOs on the OTC markets are just looking for a better way. The market is growing. The opportunities are coming faster with technology and AI. Things that were impossible 5 years ago are now are available to us using AI. There's all sorts of new opportunities that we would like to take advantage of, but unfortunately there's certain funds that we can't tap into yet, and there's certain investors that aren't allowed to buy our stock. And there's been a ton of different opportunities that have been given to us by the regulators, such as Reg A Plus and Reg D, and all kinds of different opportunities for investors to play individual VCs in our marketplace in order to grow companies, get behind companies, back companies, and together we can share in the windfalls. And there's a lot of companies that are going uplisting over the next few years, and we're hoping to be part of that. We've tried on a couple of different occasions. We weren't successful, but we're going to keep trying until we get there, where we have the support of a great investment bank, which a lot of OTC companies don't have. We have a great story, and we believe that we have the opportunity to get there, and we're going to keep trying. But what we need is the support of a broader shareholder base, and we need the support of people who actually understand what this market is all about, and that takes education. And I think that education should come from the CEOs, down, in whatever company you happen to be invested in. I think that there's been a wall there. That wall needs to come down in order for the shareholders to have access to us and us to have better communication with our shareholder bases. And I'm not talking about communicating in StockTwits. I'm not talking about communicating in Discord. I'm not talking about communicating on iHub. I'm talking about roundtables and open discussion, not different from investor calls that happen, the weekly calls that happen that CEOs have to do to their investment bankers when they're trading on a senior market. That needs to happen on a smaller scale on the OTC markets, and the education process needs to happen, dialogue needs to happen, and it'll break down those walls of animosity, distrust, and open up the pathway to companies getting the support they need in order to make those filings, get their books in order, and make those applications in an attempt to uplist where the significant multiples are found. And that's really what I wanted to share today. I'm going to be coming back at you with many different videos over the course of this series. And again, some of this stuff is going to be unorthodox. It's going to be a little bit different, as I said in my first video, but I believe it's an important education process as the CEO of Sycamore Entertainment to be able to open the doors on some of this information that for a long time has been kept away from the shareholders, in order for you to understand, first of all, the market that you're in, which I'm going to state again is very different if you want to be a trader. If you want to be a trader and trade stocks in and out with liquidity, you shouldn't really be heavily invested in OTC markets. I think you really need to be on the Nasdaq. There's lots of stocks trading over there again, between $1 and $1.50 that have good prospects. They were taken public. Maybe the stock is a little beaten up, but there's investment bankers that are holding it and they're recommending it to their clients. And these things cause price spikes that, as a trader, you can take advantage of. And there's tons of stocks that you can put on a scanner and day trade on the Nasdaq side. But on the OTC side, I think the thinking needs to be a little bit different. It's a little bit premature to be trading on a consistent basis on OTC stocks. It's primarily news driven, it's hype driven, it's rumor driven, and that's not an environment that's safe for investors that are looking to trade volume and momentum. And a lot of times, because they're so thinly traded, some of these stocks could be manipulated. Even without us CEOs being aware, somebody out there could be manipulating our shares and we don't know, and people get hurt. And that's not what we want. We want to nothing more than to execute on our business plans, grow our companies, and take these things off OTC markets and onto the senior exchanges. Because at the end of the day, OTC markets is a venture market. It's a breeding ground for ideas, it's a breeding ground for concepts, and it's a breeding ground for companies that they need to raise money in order to execute their business plans, grow their business, make the necessary filings required, and graduate to a senior exchange. That's really what this market is about. And yes, you can trade on it, but again, the odds are stacked against you because the professionals understand that you are unorganized. You're not an organized group. You lack the information. They're well aware that there's a lack of communication between the traders and the CEOs, and all of that those facts work to the advantage of the professionals that, by and large, give us the money in order to keep moving, in lieu of the fact that they know we're not getting it from you folks. You folks should really be the investment bankers and the venture capitalists and the loan brokers to these OTC companies at the beginning stages while we grow our businesses, so that you folks can be the beneficiaries and be participating in those liquidity events and those uplist events if, as, and when they happen. But unfortunately, that's not the case right now. A lot of you folks are being diluted. A lot of you folks are being scalped. A lot of the businesses out there, they know that, and they're just taking advantage of it. But there's a lot of us out here are pushing hard. We continue to execute our business plans, and we're going to continue to move forward as best as we can. But I think now's the time. There's so many technologies that have come out. There's so many things that we couldn't afford even 5 years ago that are now at our fingertips, that have lowered the barrier to entry in order to take these businesses forward. But again, it needs constant capital injections, just like VC funds. VC funds are making consistent capital injections into their portfolio companies as they go through their growth phase. They're called rounds: seed round, and then second round, third round, fourth round, fifth round. Some of these companies get 5, 6, 7, 8, 9, 10 rounds of financing before they're able to grow to revenue, and which takes them to a S1, which is a filing to an uplist. And OTC companies, we never get that. We're reliant on our friends and family, our own personal savings, and at the last resort, when that's tapped out, because remember, a lot of these OTC companies don't have any revenue. So when we run out of capital, we resort to taking money from these funds, and they're waiting for us in order to be able to get their hands on our shares at deep discounts and high interest rates. And then what they do is they wait their holding periods, and the minute that those holding periods are out, those shares find their way into the market. And at whose expense? At your expense. And it shouldn't be like that. You folks should be taking those opportunities and taking those risks in order to reap the rewards at the end of the day. And let's face it, a lot of these venture funds, a lot of these vulture funds, let's call them, they know that the majority of these companies trading on the OTC will never uplist. They know that, and a lot of them are hoping on that. A lot of them are hoping that these companies don't even exist a year from now. But certain companies, we keep trying, we keep pushing forward, and at the end of the day, we hope we'll be successful. And that's only going to happen through education, and it's only going to happen through open doors, and it's only going to happen through more and more innovation. AI has been a boon for us in terms of getting information, unlocking new markets, and we're going to take advantage of that. But I think that there's an education process that has to happen, and it stems from people trading in this market truly understanding the market that they're playing in. And again, traders are looking to scalp. Don't get me wrong, there has been successes in the OTC market, and I'll be the first to admit, even people who were trading in SEGI back, during COVID, some of these people were hanging on to shares for years and years, and they had a significant liquidity event when SEGI went from trading in the trip ones to trip twos all the way up to over 14.5 cents on massive volume. And some of these people made tens of millions of dollars in the process. So it happens, but those are outliers. You don't see those opportunities very often. And I don't think people should use that outcome as a catalyst to do it again, because it may never happen again. And that's the reality of the situation. What I do think is that if investors understand the market that they're in the OTC markets, and if they want to have a longer term view, nurture companies, support companies, spread the word about these companies like they do in the VC market in Silicon Valley and Nasdaq IPOs, I think more companies would make it out of the OTC markets and uplist to senior exchanges, and more of the investors that took that risk on at the OTC stage will see similar, if not higher, multiples in terms of returns on their investments as they're seeing in the VC market. I'll leave you with that. I just wanted to share those thoughts today, and I'll keep coming back with different angles on OTC markets, my take. I have a wealth of information as the CEO, and I just think it's time in order to grow my company and the companies of other on the CEOs on the OTC markets. I think somebody needs to be sharing this information, and I'm out here doing that, and I think that everybody's going to benefit from it. I'm not out here soliciting anybody to buy shares in Sycamore Entertainment, but what I am urging you to do is take more of an interest in the companies you are invested in. Ask more questions, find out truly what the plans of the CEO are, pick up the phone, call the company, fire them an email, ask how you can get involved, ask if there's opportunities to get involved, develop relationships, speak to an accountant, speak to a lawyer if you have to, get educated, and I think you'll have more involvement, and it's also fun, and it's a way to learn about these companies as they go through their journeys. With that said, I'm going to leave it at right here in this video, and I'll see you in the next one. Thank you.